Today, we have a crucial topic to discuss: securing your financial future through a well-structured retirement portfolio. Imagine a life where you can maintain your desired lifestyle without the burden of employment income. Well, that's precisely what we're going to explore today. 1. Understanding the importance of a well-structured retirement portfolio. 1a. Setting the foundation for your retirement. It all starts with crafting a solid foundation for your post-work life. A comfortable retirement requires careful financial planning. 1b. The significance of early planning. The earlier you start, the more time your investments have to grow, thanks to compounding interest. 1c. Balancing your financial priorities. Striking a balance between current financial needs and future retirement goals is key. 1d. Why a retirement portfolio matters. Your retirement portfolio is like a safety net, providing consistent income, shielding against inflation, and ensuring financial independence. 1e. Legacy and future generations. A well-constructed portfolio can leave a financial legacy for your loved ones or support charitable causes. 1f. Adaptation to changing circumstances. Life is unpredictable. A versatile retirement portfolio can adapt to unexpected events. 1g. Investment in your well-being. Your retirement portfolio represents an investment in your well-being, allowing you to enjoy life to the fullest. 2. Key components of a diversified retirement portfolio. 2a. Asset allocation strategies. Diversification is the bedrock of effective risk management when building your retirement portfolio. This strategy involves spreading your investments across different asset classes, such as stocks, bonds, real estate, and cash equivalents. By doing so, you reduce the overall risk of your portfolio by avoiding overexposure to a single asset class. 2b. The importance of diversification. Diversification isn't just a fancy financial term, it's a critical component of your retirement portfolio's success. By spreading your investments, you minimize the impact of poor performance in any one investment. If one asset class underperforms, the gains from other assets can offset potential losses, helping you preserve your hard-earned capital. 2c. Asset allocation models. There are various asset allocation models to consider, each tailored to different risk tolerances, investment horizons, and financial goals. These models include conservative, moderate, and aggressive allocations, and your choice should align with your unique financial circumstances and comfort level. 2d. Types of retirement accounts. To optimize your retirement plan, you must have a thorough understanding of the most common types of retirement accounts. These include 401k accounts, individual retirement accounts, IRAs, Roth IRAs, and self-employed retirement plans. Each account type offers its own set of benefits and tax advantages, making it crucial to select the right ones for your financial goals. Welcome to Wealth Creation Gents, a personal finance channel focused on financial intelligence. 3. Building your retirement portfolio step by step. 3a. Assessing your risk tolerance. Before diving into the specifics of constructing your retirement portfolio, it's imperative to evaluate your risk tolerance. Understanding how comfortable you are with investment risk will guide your decision-making process and help tailor your portfolio to your financial circumstances and comfort level. 3b. Setting investment goals. With your risk tolerance assessed, the next step is to define clear and achievable investment goals for your retirement portfolio. These goals should be based on your desired lifestyle in retirement, whether it involves travel, hobbies, maintaining your standard of living, or leaving a legacy for future generations. 3c. Choosing the right investments. Armed with knowledge about your risk tolerance and investment goals, it's time to explore various investment options. Bonds, stocks, and mutual funds are just a few of the choices at your disposal. Each investment option comes with its own set of risks and rewards, making it crucial to align your choices with your goals and comfort level. 4. Sample retirement portfolios, a closer look. 4A. Conservative portfolio example. A conservative retirement portfolio is designed for individuals with a lower risk tolerance. It prioritizes capital preservation and income stability through investments in bonds, cash equivalents, and dividend-paying stocks. This approach aims to provide a steady and reliable stream of income while minimizing exposure to market volatility. 4B. Moderate portfolio example. A moderate retirement portfolio strikes a balance between risk and returns. It includes a mix of stocks and diversified bonds, allowing for steady growth while still providing some protection against market fluctuations. This approach suits those who seek reasonable returns without taking on excessive risk. 4C. Aggressive portfolio example. An aggressive retirement portfolio is tailored for those comfortable with higher risk in pursuit of maximum long-term growth. It allocates a larger portion of the portfolio to high-growth stocks and may include riskier asset classes like emerging markets and alternative investments. However, it's essential to carefully assess your risk tolerance before adopting this strategy. Conclusion. Securing your financial future through a well-structured retirement portfolio is vital. It's a journey that starts with early planning, assessing your risk tolerance, and making informed investment choices. Regular reviews and adjustments are essential as your needs evolve. Thank you for watching. If you found this video valuable, please remember to subscribe, like, and share. For more in-depth articles, click the link below to visit the Wealth Creation Gents website.